Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for a pretty wild trading day today. Craziness. On Monday, the 27th of July, 2020. I'm a little late tonight. I had a lot to do tonight. But suffice to say, the stock market had a nice day to the upside. The action in the silver, unbelievable. Look for a big gap if the market holds up in the futures the way it is. Futures are up $1 tonight an ounce. That's pretty big. Gold is up about $30 an ounce, so we'll see what that does. And of course, as those two go, the miners and everything related to them, they get a boon to it as well. So as we look at the tech sector, what you did here, and this is interesting, we had a gap left in this chart. You had the low here from 106.01, let's call that, and then the high of this day, 105.89. And the market went up and filled that gap. That's all that's happened. Gaps generally get filled on charts. I find that they don't get filled as often on ETFs and SPDRs as they do on individual stocks or the futures markets. I don't know why, but I just see it, and when I see things, I pay attention to them. But you filled that one. The pattern is not trending. You've got a higher high, lower low. A trend up would have higher highs, higher lows, and a down would have lower highs, lower lows. You're not getting that. You have a mixture of the two right here. The battleground is clearly the 18-day average. Now, as we were breaking down to this number, like this, I had pointed out to you, remember I didn't do an update this weekend for you, but I had pointed out that each time that we've gotten into that zone of this 18-day average, the market has found support. You got away from it, admittedly, on the close Friday. You came right back up to check it out today. We'll see what it does from there. That zone has been acting very, very good. It is certainly not something that I'm seeing so far any sell signals come out of. You could get a sell signal in this market if the market were to fail here and close back under today's lows tomorrow. That could give you lower highs with lower lows. First time I'd be saying that, and I don't know how long, but I'm aware that that pattern is there. In terms of momentum, well, the bias is down since you're under the 18-day average. The momentum is still pointing down, has not even flattened itself out yet. No trend, caught in the Bollinger Bands of sideways action right now. In SMH, you fell back to the 18-day average and found your support. Now, it's been a support zone, just like I pointed out on XLK. If I stepped here, you've got the same thing. That doesn't mean you can't get under it a little bit, but it doesn't have any legs to it. It doesn't really run. So what you did today is you came back up over that high. So now you have a higher high and a lower low. The resistance is right here at 166.45. When we come to XLI, the pattern is bullish. You have higher lows, higher highs. Where did the resistance come in? We expected to see it last week on the first challenge of the upper Bollinger Band, which it did, and the 200-day average. You can see you got there, and all you did is you pulled back from it. When you lose the embedded reading, gee, what's an embedded reading? When both numbers of the slow stochastic are going sideways with readings over 80 for several days in a row or more, and you certainly have that. It's called embedded, locked in. Momentum often turns before price. If the reading gets under 80 on a close, it's a sign to abandon long positions. That's how I initially interpret it. If it stays like this, it's telling me on these breaks, the traders, the pros are buying the market, still looking for the 200-day average until that number is lost. Why the 200-day? Because it's the closest main moving average in front of the market. On the energy sector, this is just overbought, not embedded. Both numbers not going sideways over 80. Now you've got a pattern of lower highs, lower lows, but the bias is up since you're over the 18-day average, momentum overbought, and you're in what I call a pipe. When the stochastics start narrowing in like this, they'll try to break out. The question is it going to last or not? Now, it doesn't have to be a breakout to the upside. It can be to the downside. And right here, we don't know which way this wants to go. But I think you'd agree with me. The Bollinger Bands, and you'll trade within those 95% of the time, they've narrowed in a lot. Coming to the QQQ, again, each time we've hit this 18-day average, what has occurred? I think you'd agree. The market's found its footing. Well, on last Thursday, You got here. I didn't, for you, do any Friday update. I did for my paid subscribers. They had an end of the day, one of these reports, and then they also had, unlike you, the weekend version of all the charts with using weekly charts. I just didn't want to put it out this weekend. And you can see how the market came back to that 18-day average of closes. I'd call this neutral right here. When we step over to the emerging market, the pattern is one of lower highs, lower low, over the 18 and the 200-day average of closes. So while the swing line is down, the bias is measured because prices are over that, is to the upside, and you're in an overbought market that is not embedded. In GLD, well, we have now 1, 2, 3, 4, I think it's 5 in a row that were closed over. Yeah, you're there, not here. So day 1 of closing over the Bollinger Band, 2, 3, 4, 5. That's typically about all you get before you move to the right-hand side. There is a gap in this chart from that low to here. I am not saying it has to be filled right away, but it's a logical zone. We'll see what happens. You have 6 days in a row if you close this way in the gold futures. So these markets are on a tear to the upside. You got back over the upper Bollinger Band today here. You're embedded. What does embedded mean? Each break you get in the market until it's lost, I look for the pros to buy and then kick out against the upper Bollinger Band. TLT got up to the upper Bollinger Band and breaking down. Now, why? Well, if we think about it, what starts tomorrow? The 2-day FOMC meeting. So come Wednesday at 1 o'clock Central Time, we're going to get the FOMC monetary policy statement. And then at 1:30, all eyes will be on Fed Chairman Powell. What does he think about yield curve controls? What does he think about the outbreak of COVID? Is he going to do anything? What's the Fed's next plans? What are they saying? All that's going to come home to roost. We've had a nice uptrend. You're into resistance. I hate going into FOMC meetings. I generally, in a futures contracts, tell my clients, step out. We can always take another look. Why? Because the unknown can happen, and I don't know what that unknown is. That's why it's the word unknown, and I don't know what it's going to do in the markets. We know the algo traders will be there. FXE, the euro. Look at how this market's just running dramatically to the upside. This is powerful. Here's a market with the embedded reading. I was asked today, my firm wrote me a question, Ira, where do I think the euro is headed on this burst that it's going? I said, ultimately, I think it's the 120 area, but we're up to a zone here where at any point you can get a bit of a problem in the market, but that's where I think it's ultimately going for the euro currency. This is FXE, not 120 on the euro currency itself. So I put it all together. I try to come up with a game plan. And we noticed that a lot of you are liking the idea of mixing my subscriber video for the futures at 5:40 in the morning, along with the end of the day futures, the ETF spider video. Well, we did it. We put together a package that gives you a discount on both. You can buy them by the month. Away you go with it. Pretty simple way to move. People are asking, can they get a yearly subscription to it? I'm looking into it. It's my decision. I have to figure out what I want to do with all that. But you get to try this. And it's not expensive to give them both a try as a grouping. I make it very simple. They will play on the free handheld device we give you. Starting on Sundays, twice a month, I'm going to be holding live webinars where you'll be invited to come in. They're going to be Sundays. I might do some in the morning. I might do some later in the afternoon when the futures market opens. I'm going to cover no more 34 charts. I added BETZ today. There's enough data there now for me to include it. So my subscriber videos, they're getting that at this point. What's this run? $16.90 for the first 30 days. I don't think it's going to break the bank. After that, $28, and I'm going to come up with some number for a yearly that you can get, but they're non-refundable. Just keep that in the back of your mind. How do you find out? Go to our website at www.iraepstein.com. Under the word research, it's all there. I'm Ira. Enjoy. I will see you all tomorrow.